Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. I want to thank everybody for coming in today. Today is Saturday, September 26th, and market continues to sell off. I think last week we talked about it was about at its stretching point. Of course, we had the Federal Reserve come out last week with their much awaited Fed announcement. And of course, they announced that they were not going to raise rates. Now, one of the interesting things happened in the press conference after the announcement. A reporter asked Janet Yellen, I think I mentioned this, but asked if they ever were going to raise rates, and she said that she couldn't rule that out as a possibility, and I thought that was pretty shocking, actually, but pretty arrogant, really. I mean, these people think that they literally are like Oz, standing behind the curtain, running the economy. And of course, you could see if we go back to that day. Why don't I just do that real quick? Let's look at a 20-day chart, just for grins. We normally don't go into this kind of detail, but we were right about in here when the Fed announced that they were not going to raise interest rates. The market shot up, went up to here, immediately sold off, and you can see has been selling ever since. So, what does that mean? What does all that mean about the Fed? I mean, does it mean the market didn't like what they had to say? It's really hard to interpret news in the market, and certainly there's no edge in trying to trade the news for retail investors, because there's all kinds of technology that brings the news to floor traders and high frequency traders in a lot more timely fashion. Then that news comes to us and we can act on it. So the most important thing for us to focus on, and hopefully we've been making that clear here in the YouTube videos, but trend is the most important thing for us as retail investors to focus on. So let's step back and let's look at the forest. This right here, what we're looking at right now, is the forest. We've had this uptrend that's been contained within this line and this line since March of 2009, okay? And recently, back here, toward the end of August, this line, this bottom line, the bottom trend line of this rising wedge broke down, okay? And when that happens, when the dominant trend starts to show weakness and break down, you can see it really accelerated. So as soon as it kind of broke here, but bounced and touched here and bounced and broke here and bounced. But once it decided to break, and I think we mentioned that 2044 area as a pretty important area, because it was above the 2044 area, was in here, but just below all these closes. So once we broke the 2044 area, it was off to the races to the downside. Now that this trend has been broken, some of this has to get worked off in the market. We call it consolidation. So think of it like a spring with a weight on it, and you pull it really hard to one side and you let go. And what does it do? It bounces up, it bounces down, it bounces up, bounces down, and it gets tighter and tighter, right? And then this pattern is what we call a consolidation pattern, and it's normally a trend continuation pattern. So what does that mean? That means once buyers and sellers get back into equilibrium again, so this is all out of equilibrium. When you have a massive little crash like this, a little mini crash, the market gets out of equilibrium, has to get back into equilibrium, and then generally continues the downtrend. Okay, so that's what we'd expect to see here. That's why we talked about potential levels up here that the market could go to. We mentioned a gap up here where this green box is, but we didn't really think that this was going to go up here. Hopefully you gathered from the way I was talking that you didn't think that we still have this box up here, but really I didn't think there was a possibility for the market to go up here. There were no open gaps. There was no reason for the market to go up here once it broke this downtrend line. So you can get into a daily chart and you can get in the trees here, but what I'd like to kind of keep the group that comes into this YouTube channel and watches these YouTube videos is the bigger picture. The bigger picture is, and that's the forest, okay? So when you're standing right on the edge of the forest, all you can see is the trees. But if you get up high and you get in a helicopter or an airplane or whatever, you can see the forest as a whole. And so that's what we're looking at, the market as a whole. And the market as a whole is broken. All through in here, we were talking about how sector by sector the transports were dropping off, and then the semiconductors, and it got to where there was only the biotechs and the financials that were holding up. And when a market gets thin like this, eventually it kind of just collapses or it gives up under its own weight. And so that's what we have here. So let's zoom in on last week a little bit better. You can see this red candle here. It was definitely a down week. The Fed statement drove price action pretty high, actually higher than I thought. I didn't think it was going to go much higher than this, but this is pretty high. And then the market, immediately sold it off. It's kind of a buy the rumor, sell the news kind of a situation. And at this point, we might get a little bounce, but you should expect the market to take out this previous low here, which was that big 1,000-point day on the Dow. And most likely, again, notice the words I'm using, most likely come down into this area back here where the pattern started. So we had some lines on here before, kind of a smaller rising wedge, and we would expect the pattern to complete below this low here, somewhere in this blue box, before we get a decent bounce. Now, let's talk about the bounce, because I know some of you out there are eager to put your money back in the 401k and get it working for you. And so let's look at how that might play out, and how you might take advantage of something like that. So here's that start of the pattern. Here's our support box. Notice prices were generally up from this pivot. Okay, so we've talked about this before, and I'm spending a lot of time on this today. I hope you don't mind, but we've talked about this before, where the market moves from pivot to pivot, and you can kind of see that, if I draw a line like this and I draw a line like this, how that makes a pivot right here, this where the market changed directions. And if you notice, from this area, from right here all the way up through to about here, the market was generally, so this pivot from this downtrend, I mean, we could draw more pivots in here, pivot, 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 but in general, price action was generally up all throughout this area right here, okay? That makes this pivot right here a very important pivot, which is why I have it highlighted yellow, because it is the last pivot into the uptrend before the most recent downtrend. Okay, let me say that again. It's the last pivot in the uptrend before the trend changed, or before the trend changed into a downtrend. So that makes it an important place on the chart, and generally where support would come in. So I've got a box drawn here. I've got this price action around 1818, which is quite a ways from here. It's 100 points on the S&P 500. So it's going to take a little time. Now, this process should pick up a little speed next week. We might, like I said, we might get a little higher move next week, early in the week, and then you'll see this accelerate pretty rapidly, probably to just below. Like if we drew a box off of this low here, it would be in this area, and then we'll get a bounce of some kind, and then a move into this box here. Now, once that happens, you could go into your 401k. Most of your 401ks are limited. You can only take action like every 30 days. So that means that, you need to be able to come in to a place where the uptrend could last more than 30 days. Otherwise, you won't be able to sell if you need to sell because the market's going lower. So when we come into this box, now you could wait till the market bounces a little bit and then pulls back. But when we come into this box, this is a good place for you to, if you want, I'm not saying you have to do it, I'm not recommending that you do it, but you could go and put some or all of your money into 401k into a particular fund. It doesn't really matter because they all follow the S&P 500 anyway. If the S&P 500 goes up 10% or 15% from this low here, then pretty much whatever you put it in your 401k is going to go up 15% unless it's a bond fund. I wouldn't put it in a bond fund, but like a growth and income fund or emerging markets fund. No, I would stick with U.S. since we're focused on the U.S. Index, indexes. That's pretty much what I talk about here. Yeah, we're talking a little bit about the DAX, and we talk a little bit about the FTSE and, Japan and stuff like that. But by and large, we're focused on the U.S. indexes because that's what most of your 401ks follow. And that's the benchmark they test themselves against. So when we get into this area, you could go into your 401k and put it into the market. And then we should have, a pretty strong move up into, this zone right in here around 2050. And what pivot are we going to be looking at? We're going to be looking at this pivot right here. So there's a pivot right here. And we can look at a box off of that pivot, which would be like right here, which you can see I already have marked. So you could go long your 401k. You could put your money back in your 401k and invest, trade, whatever terminology you want to use during this period right here, because this will be it's usually about twice as long as this down period here. So if you count, and the question is where do you start counting? But let's just start counting from here. This is 1 week, 2, 3, 4, 5, 6, 7, 8, 9, 10. And let's say we spend the next 2 weeks going down. So we're talking about 12 weeks down. And you could have anywhere from 6 weeks to 18 weeks up. And I know that's a big range, but it's a big enough range that, more importantly, what we're going to be looking for is where does the price go? Now you could let me back up, because this could look quite a bit different. You could come up like this, like into this area, and then have it sell pretty hard back down into this area. But you should be okay. It shouldn't make a new low at this point until it gets up into this area. And then from here, we're going to go and make new lows. But you could get a situation where it spends, 3, 4, 5 weeks kind of grinding its way up here to, around 2000, and then sell off pretty hard back down low, and then grind its way up again now to 2050. So, and I wouldn't try to get out here and get back in here. I mean, there might not be enough time, and your 401k might not allow it. So, we're just kind of looking at these, conservatively these moves in here. And some of you might not be thinking that's all that conservative, and if you want to sit that out, that's fine. But this is what I would expect. I'd expect a trip down into this area around the box, and then a pretty good move up, and that move could be fairly overlapping as this is. In other words, we have a move up, we overlap back, and then move up again, as this is also very overlapping. So I hope that helps everybody. Certainly if you have any questions, just post your comment or question in the comments section of the YouTube channel. I think you do have to be subscribed to do that, but subscribe anyway. Why not? All right, let's look at the VIX. We saw the VIX finally tick up a little bit this week. And of course, one of the first things I noticed is that, this box that I drew a while back, notice how it's contained pretty much, and above this trend line, it's pretty much contained the volatility price action since the big spike. And as the market comes out and makes a new low, we should see volatility spike up. Now, it might not get this high yet. It will eventually get this high and actually take this high out. But even though the market goes in and makes a new low, the volatility might not come up and make a new high. You might get the volatility kind of come out this way, and then when the market starts to rally again, you get the volatility pull back again, maybe even breach this trend line. But I don't know that I would expect the volatility to make a new high, even though the market's going to make a new low. It doesn't always work that way. All right, let's look at the bonds. We mentioned bonds here just a second ago. So let me go ahead and pull up the 10-year Treasury, which is probably the single most important interest rate in the market. I know the Fed, there's a lot of focus on the Fed's rate, but by and large, the Fed is following these rates or the 3-month Treasury rate. And when you start to see the 3-month Treasury rate tick up, I think right now it's around 0.1. But when it gets over a quarter, to 0.3 to 0.4, the Fed will raise rates. You can almost you can guarantee yourself that. So the fact that the Fed kind of thinks that it's not impossible to outrule or to rule out zero interest rates forever, it just either they don't understand how they what their role is in the market, or they just have a lot of hubris and think they're omnipotent and very, very powerful, more powerful than they actually are. So you can see here interest rates kind of flat for the week, and could actually they could actually pull back a little bit. We had this, I don't know when I drew this line, but I drew the midpoint of this white. A lot of times the midpoint of a large white or a large black candle will be support or resistance. So that's what this 2.08 area is. And you can see this week we actually traded down to it and then bounced and came back up. I mean, this could be the low, or you could see rates pull back, a little bit more, maybe like that. And then you get some bars that start, they're probably going to start to accelerate once they take out this high. You might see some pretty long bars in here like this in the coming weeks. But that doesn't mean it couldn't pull back first and pull back, a little lower than this midpoint of this large white candle. So we'll keep an eye on that, and you should too, especially if you're still in bond funds. This next move could be quite violent, and it could be government driven, and I just wouldn't recommend trying to nuance this. You should probably respect the fact that this lower high below this all-time low is very important, and now we have quite a bit of price evidence above that the market is wanting to move out. We pulled back to this downtrending channel and bounced, and I think if you let this go a little bit longer to see if you can make some money to the downside, I think you're really taking a lot of risk here. the market could start moving pretty rapidly in the upward direction here. So just my opinion, doesn't mean it has to happen that way. I just thought I would mention that for you. Germany has broken this most recent trend line. It looks like it's on its way to test this box. Now, if it goes through this box, it's probably going, in fact, let's just draw it. If it goes through the box that we have drawn on there, this box right here, it needs to be a little thinner. Well, make this a little thinner. It doesn't have to be that thick. If the DAX or if Germany moves through this support area, it's likely going all the way to here. So keep that in mind if you're invested in German markets. Japan never made that area up here that we had put on the chart. It came close, got right up into that area, and then sold off hard. And Japan is now back in the thick of this trading range. My guess is it'll probably chew through this, and if it breaks this area, it's probably coming down into here. Let me draw a box. Probably coming down into this area if it chews through this support area. The UK also broken. I have these boxes on here, like this box right here, but it's very possible that this box doesn't hold. Now you could get, and I know we have some viewers there in the UK, so I'm going to go ahead and talk about this. You could, what do you see here? You see a pivot, right? See this pivot? So you could get a move back to the pivot. Kind of think of this as a resistance area over the pivot. And then, kind of a trend continuation to the downside. Could get something like that. A lot of times, if the market is, in fact, has changed trends, these pivots will only provide a little support for some interim period of time, and then the market will blow through them. Just like it moves through these pivots on the way up, it does the same thing on the way down. Sometimes with a little bit more gusto. Let's look at, I guess that's about it. Let's look at the, one of the things I wanted to mention, let me go back real quick. When you look at the S&P 500, let me look at a daily. There's quite a bit. Let me back out a little bit further than that. This low right here on the daily is at, what is that? That's 1866. But if you look at the futures, that low is at 1830. This is one of the reasons I think it's important in the cash market to focus on this prior low back here at the start of the pattern at around 1818. And the reason is because I don't think a lot of this trading took place before the market opened, and I think this low is artificially high relative to where the futures market is. You can see here they're much closer together than in the futures, than in the cash markets. So you might make a note of the ES/ES, and you might kind of take your cues from the ES rather than from the cash market. Now, if you just wait until we come into the support area that I showed you earlier, the blue. Let me go back and show you. Let's get up to your chart here. If you go ahead and wait until you get into this area, this blue area here, then you don't have to focus so much on. You don't have to look at the futures. But if you're trying to nuance this, or you're afraid it won't go all the way down to here or whatever, you kind of need to focus on the ES, because the cash market didn't. The market had already gone much lower than this before the cash market opened at 8:30 Central, and so we don't actually have the low that was here that morning. Although you can see it in the futures market. So if I zoom in here, You can see this candle right here, the big candle. The low, this candle closed at, well, I'm looking at a daily. Let me look at let me put it on a, well, let me put it on this hourly here. Well, I don't have enough data. Yeah, I don't know why that's not coming up. Why the time is not coming up on that. But you can see that we go from the 21st to the 24th on that candle. And you can see how there's a tail. Let me zoom in. See how there's a tail between here and here on that candle. That's all price action that took place before the market opened. The market action you didn't actually see that until you got right here, right in this area. So all this area right in here took place before the market opened. So when you look at the cash market, normally you don't have to worry about this because it almost never happens. But when you look at the cash market, it should have come down. Crap, I zoomed in too much. It should have come down into probably this 1850 area, but actually only came down into the 1865 area. So it should have come down about 15 points lower, but just didn't. You just don't see it here because it happened before the market opened. All right, let's look over here at NinjaTrader. Let's look at oil. Last week we were showing that it looked like oil was going to bounce. We got that DP, and even though it was pulling back, so let's zoom in here a little bit. So here's this week. So last week, it bounced, it was pulling back, and you kind of got this, this zigzag. It looks like now the trend is resuming, and I think at this point we should expect oil to kind of make its way up into this area right here. So enjoy those gas prices right now while they're still low, because we could get a pretty quick move back up into this 68 to 70 area before oil then rolls over and gives us lower prices again. Let's look at it's the UK. The UK is kind of at DP support here. It might kind of wiggle and then blow on down through this. It might just kind of retest this area and then bounce. But certainly it's at the lower end. I mean, I think, certainly I wouldn't take any trades into this direction just yet. All the trades at this point in the UK tend to be kind of biased to the upside. But that doesn't mean it could go all the way up here, say to a new high. It could just go up slightly, roll over, and then actually break down through this support area. So again, the trend, it's the bigger picture is this green line. The trend is broken. It kind of broke here and then got back above it, but then broke again. That's usually not a good sign. So I don't know that I would be long the UK. I don't know. I don't study that market as closely as the S&P, so I'm not as nuanced and informed on kind of the patterns from week to week. So these are all longer term charts that I'm looking at. This is a weekly chart. Same thing with the DAX. The DAX looks like it could make a new low here, slight new low, but it looks like it wants to bounce. Now it doesn't mean it's going to bounce to new highs. It could just bounce up into this area and then roll over and really start accelerating to the downside. Excuse me. My voice is a little bit hoarse. I apologize for that. What else did we want to look at? We can look at the ES on a weekly. It doesn't look quite as bad, but one of the things here is the software will actually pick up pretty clearly. Well, if I can get it to work, let me click on that and then click here. Notice what it picks up. For some reason, it's not wanting to do it. maybe that high. Well, it's hard to tell here if this might be slightly higher than that, and that's why it's not picking up. But this looks very impulsive. You got a 1, 2, 3, and then a 4 up into this area, and I would expect 5 into this area. We can take a DP off this previous pivot. We've already talked about this, but in general, why do we pick this pivot? Why is this particular pivot important? And the reason it's important is, let me zoom in to show you. And I've already said this, but I'll say it again. This is the last pivot. This little V here is the last pivot down before all this price action generally to the upside. Okay? That's what makes it important. That's what makes it more important. It doesn't mean this one's not important, but we're already through this one. So this one's no longer important at this point. It doesn't mean this one's not important, but we're already through that one. So what you do is you look at the last pivot down that was going down, and that one's this. And so this now, the DP off of this pivot is very important. And so we will focus our attention on it. And notice that it shows price action on the ES. Now, this is the futures. Support at around, what is that, 1748. So if you watch the futures and you're trying to figure out, okay, where do I go into my 401k long? When can I get back in my 401k and make a little money to the upside? The answer is at around 1748 on the futures. So get up, turn CNBC on in the morning and see what the futures are, or see what they close at. It's pretty easy to do. Now, let me point something out here, so then the question becomes, okay, where should I get back out? Now some of this it's hard to tell early on. You have to kind of wait for some of these things to happen. But the down move should look something like this, right? Something like that, okay? And then we'll get an up move, okay? And the up move will look kind of just the opposite, like a mirror. It'll go to here, and then it'll pull back a little bit, and then you get a big move, maybe like up to that pivot, and then back, and then maybe you get something even as high as that. And what I want you to notice is this pivot right here. This was the pivot. This was the previous pivot up before we started moving down. This all of a sudden becomes very important. And what we would do is we would make a box off that and look for the market to return to this area. Could go slightly higher, but this is a nice safe area. If you're long your 401k, you want to get out. Now let's say you've been living through all this, all the way down, because you don't believe me. There's no way to predict the market, Seth. There's no way you can tell where the market's going. And I agree with that in some ways, and in other ways, there are times when the market is a lot easier to predict than at other times. And when you start getting into these impulsive moves, it becomes a little bit easier to predict. Now, when I say predict, I'm talking about with a higher degree of probability. There's always uncertainty in the market. You could be waiting for the market to go up and it goes down 300 points. And it might still go up and hit your target, but it went down 300 points first, and there's just nothing you can do about that, okay? So I want to make it clear that we're still talking about probabilities. We're not talking about certainty. But this is pretty much how the market moves. And if we go down into this decision point area, this support area, this box off this pivot back here, we should expect a bounce, and that bounce should take us into the previous pivot before this recent downtrend started. And that would be up in this area, around 2050 on the ES futures, the S&P 500 futures. So I hope that's clear. I hope, I don't want to overstate. I don't want to make it sound like I'm a soothsayer or I'm trying to be a soothsayer or anything like that. I'm simply trying to help you, number one, stay out of the bear market. But B, if you're determined to try to make money during the bear market, show you where the areas are that are safe to re-enter for some period of time while the market is rebalancing. Okay, that's what we're going to be looking for. We're going to be looking for areas of rebalancing, and we're going to get back in and make a little money in those places. We didn't look at gold. We can go back and look at gold. Gold is trying to, gold and silver both are trying to make a move higher, and they've been moving a little higher. But I think it's been more difficult for gold and silver to move higher, mainly because the dollar has started to move higher too again. So, but you can see here, and this is kind of what it'll be like. Let me zoom in a little bit on this. This is kind of what it'll be like when you're getting back in your 401k after we've had our sell-off. You're going to get in one of these DP areas. It's going to come up, and it's going to pull almost all the way back, and you're going, golly, you're going to say to yourself, I should have got out right here and all this stuff. But, you sometimes just don't have that luxury in something like a 401k. So you have to be willing to get in here, let it pull all the way back, and then this should go higher than this pivot up here. So that's what we should look to happen. In fact, gold, we're saying gold should get well above this 1180 area. In fact, I'm looking for this 1350 area at least, and maybe slightly higher. So hopefully that helps with gold. Let's look at the dollar real quick. That's not the right chart. It looks weird. There's the right chart. Okay, so we got this, we got this previous high way back here of 121.29. And, who knows, we could go take that high out, but right now, because, who really knows, but the dollar is, we had this big rally right in through here that took us out of this support zone that I had drawn off by these channels, pull back to support, almost to the tick. This was just, you can see here, it pulled back into that box. And these boxes I've shared with y'all before, it's not scientific. I just kind of eyeball it. I don't really measure anything. I just look at the previous pivot, draw it just below the previous pivot, give it some width, some play, and that's where I'm expecting the market to go. So it's not rocket science, but notice how it just pulled back almost to the tick in this box. So, but now it's starting to move out, and I would expect the dollar to take out the previous high, which was back here in March of this year, where the dollar got up to 100. I would expect that to be taken out by a little bit. At least, I've got this 105 area marked here, 103 to 105 area. That's what I would expect to see. And then you'll probably see the dollar pull back again before it really lifts off. And I think ultimately we're looking at the dollar at this 110, 111 area. But we will cross that bridge after it pulls back again, because it'll be easier again. As the market unfolds, it becomes easier to see whether you were right about the previous move. And if you're totally wrong, then maybe something about where it pulls back to is different than what you thought. So we have to take it a little bit at a time. We can't just go, oh, because of this big downtrend, the market, we can't really say anything about this chart other than, this was a downtrend. This was some consolidation. We broke out of the consolidation right in here around 90. And now the market looks like it's wanting to trend upwards. So that's really all you can say. You can't say, oh, that's it for the dollar. The dollar is going to be sky high now. It hit a low and it's going all the way to 1,000 or whatever. You can't say that. Okay, I think that's it. I've kind of been talking here for a while now. Go back and review the video as often as you like. Subscribe to the channel. Follow me on Twitter if you like, at Investor Class. And occasionally I don't tweet anything there myself. Usually I just forward articles and announcements and things that I find interesting in the marketplace. I don't know. There's not a whole lot you can do on Twitter, given 147 characters or whatever it is. So, all right. Well, make sure you take your link, copy it, email it to your friends and family. Let's get our community big. I mean, I know some of you are just friends, and you're not really. You're doing this for you're coming in and looking at this to help manage your 401k, but there's probably hundreds and maybe even thousands of other people that want to do that too. So don't keep it a secret. Share it with people, and let's see if we can get our weekly views up to a couple of hundred at least. I think that would be. I would feel like I was doing a real service to the community if I could get the views up to around a couple hundred a week. All right, everybody, that's it this week. Thanks a lot. Look forward to seeing you next week. Take care. Bye-bye.